Investing is not easy. It can be confusing, overwhelming, and risky. It requires a deep understanding of the market and a clear goal in mind. But there are foundational principles of investing that can help you navigate the complex world of finance. The first principle is to understand the risks. No investment is guaranteed to make money. While high return investments may seem attractive, it often comes with higher risks. It is essential to diversify your portfolio to minimize the risk of a single bad investment crippling your entire savings. The second principle is to start early and be consistent. Investing is a long-term game, and the time is your ally. The earlier you start, the more time you have to reap the benefits of compounding returns. Make a habit of setting aside a portion of your income into your investments on a consistent schedule. The third principle is to research and invest in things you understand. Don't invest in companies you don't know anything about. Invest in companies whose products or services you use, understand, and believe in. The fourth principle is to keep learning. Investing is a dynamic field that is constantly changing. It's essential to stay up to date with the latest trends, events, and regulations. You can read books, attend workshops, watch videos, or consult with financial advisors. In conclusion, understanding the foundational principles of investing can help you achieve financial stability and freedom. Remember, invest in what you know and understand, diversify your portfolio, start early, be consistent, and keep learning. Now, from the keep learning perspective, VectorVest is ideally suited, and we are more different than anybody out there in this space. This video is going to show you why we're different and why you need to consider being a VectorVest subscriber. Every week, we put what we call an essay of what's going on in the market. Remember, part of it is to keep on top of the trends and what's happening in the market. We do that for you every Friday, and we write an essay. Let's get right into it. So, essay is written by our very own Angela Akers, and this past week was called Get Back to Basics. And I think that a lot of people don't understand that investing changes, the market changes, insight changes, perception changes. But what remains the same is the market is going to do what the market is going to do. Now, Angela started off with the Fed's preferred measure of inflation was released today, the personal consumption expenditures, the PCE index. The numbers came out higher than the previous month and higher than expected. The minute of the Fed's Reserve's May meeting were released earlier this week, showing the Fed's officials were split over a pause in the rate of hikes in June meeting, and the data would dictate the outcome. My assumption was that the hotter than expected inflation would have a negative effect on stock prices today, but the market soared. Remember, the market doesn't do what we think it's going to do. It does what it does, and we need to be in a position where we're well prepared and never be blindsided by the market. There's a lot that's in here, talking about that the 97% of the S&P 500 companies reported earnings, 78% beating their earnings estimates of 76%, and 76% beating their revenue estimates. Why is that important? Because if the market is, or the economy is shrinking, more and more companies, by way of rising interest rates, should start missing earnings because they're having a hard time because they got to raise prices. Still not happening yet. Still showing that the market is still robust, or the economy is still robust. Now, I'm going to read here, while the rate at which inflation is growing has slowed, and everybody knows that, from the lofty levels we saw in 2021 and 2022, it is likely not enough for the Fed, who refer to the magic levels of 2%. So I agree that there are real underlying fears lingering, such as inflation, the Fed interest rates, the dollar, and the debt ceiling. With all of the facts and the data thrown at investors, it becomes hard to see the forest through the trees. And the headline of the day becomes the longer term narrative. How many of you feel that you're in that quagmire right now? Reality is negated by what is perceived. Perception is everything. No matter what the market is telling you, Perception is everything. Angela talks about another essay that she wrote earlier last year called A Caveman Investor. The essay was inspired by an email that I received from Dr. DeLito. In that email, he related the evolution of investors to the evolution of man, and with only 230 years under our belts, investing is still in the infancy stage, and that is why perception is the reality. Folks, if you want this kind of insight every week where we write about what's going on in the market, you can take a subscription to the VectorVest software, 99 cents for 30 days. You will get this information every Friday. Go to www.vectorvest.com/YT. 99 cents, folks, for this kind of world-class information. Now, let's talk about what makes VectorVest different from everybody else out there, no matter who you follow. We're going to go now to a graph, and we're going to go to what we call the market climate graph. Now, the market climate graph is a 30,000-foot view of what's going on in the market. You know what three things move the markets, folks? Earnings, interest, and inflation. That's what move markets globally. Earnings are good. That's a great thing. Economies start to rock and roll. Inflation and interest rates are the bad guys. In a pristine market, we want rising earnings, falling interest, and inflation. Well, why is interest and inflation the bad guys? Well, if interest rates are going up, it makes it tougher for companies to do business. If inflation is going up, companies have to charge higher prices, and people don't want to pay higher prices for the same goods and services that they were paying for last year. So inflation and interest rates are the bad guys, but earnings are the good guys. What we're looking at right now is inflation, CPI. And coming off those levels back in July 2022, we can clearly see that what the Fed is doing by raising interest rates, shown here by T-notes, inflation is coming down. We're just below right now 4.90 on inflation. The Fed is very adamant about getting to 2%. In order to do that, what do they have to do? They're probably going to still have to continue to raise interest rates at this time. All right, so we also look at what's going on with the 50-day moving average of the earnings per share on the S&P 500. Yes, more companies are still beating earnings, but look at that. The 50-day moving average of the earnings per share is really flattened out right now, sitting at a value of $9.18 per stock. Now, we take all of this, we put it into what we call the earnings trend indicator. Again, an indicator that you won't find anyplace else but in VectorVest. It takes all of the market data, and it puts it on a value between 0 and 2, where above 1 is favorable, below 1 is unfavorable. When the earnings trend indicator, which is currently at 1.02, falls below the value of 1, we will officially be in a bear market. Wait a minute. Aren't we already in a bear market? We're not in a bear market until this earnings trend indicator goes below the value of 1. Are we in a bear run? Absolutely. Have we had some bull runs in this bear run? Absolutely. But overall, from the 30,000-foot view, we are still in a bull market, but hovering with that value right there of 1. As soon as it goes below 1, we will officially be in a bear market, as talked to you about by VectorVest. All right, that's one of the main things that we have that you don't find anyplace else. Let's go add a new graph. I'm going to change from a stock graph to a market timing graph. And yes, folks, we do time the market. Now, when we time the market, we don't predict which way the market is going to go. We follow the trend of the market, and we keep our subscribers on the right side of the trend at all times. I am going to put this on a 6-month graph, and I'm going to look at one of our timing indicators, the slowest, most conservative market timing indicator we have, which is called the confirmed call. I'm going to go down to the bottom, put that on. Now, the most recent up call we had was back here on January 9th of 2023. Was that a good up call? Absolutely. This is the slowest, most conservative timing call we have. So it's not designed to get you in at market bottoms and get you out at market tops, but it will definitely get you in to take advantage of uptrending and downtrending markets. I want to tell you this. This market timing call has never missed a major signal in the market. Ever. All right. So the last up call before the most recent down call, which occurred on 2/21 of 2023. Look at that call and look at the market. Was that a great call to keep you out of all of this trouble? Absolutely. And as I mentioned, do we have bull runs and bear runs? Absolutely we do. But from the slowest, most conservative market timing call, that was a beautiful call, and we're still in the down call right now. But let's look at the power of this market timing call. 1/9 of 2023. I'm going to go to the viewers tab. And this is where we look at the top stocks in our database, sorted by our master indicator VST, which stands for value, safety, and timing. We've talked in droves about the indicators that are germane only to the VectorVest software. Again, you can't find anywhere else. Remember, folks, we're talking about what makes us different from everybody else out there and why you need to be a subscriber to the VectorVest software. 99 cents for 30 days. VST, value, safety, and timing, looks at our proprietary indicators, relative value, relative safety, relative timing, and we get our VST on that scale between 0 and 2. If you want to learn more about these indicators, I want to invite you to take a free stock analysis, free. I want you to go to www.vectorvest.com/FSA. There you can analyze any stock that you want and get a glimpse of what our proprietary indicators tell you. Again, only found in the VectorVest system. So here's the top stocks in our database by VST as of today. But remember, we had a confirmed up call. I want you to see the power of looking at top VST stocks and how they can make you money. I'm going to change the date of this list. And this is looking at over 9,000 stocks, folks. 9,000 stocks are ranked every day by our master indicator VST. The last confirmed up call was back in January 9th. I'm going to click on OK. Now, here were the top 10 stocks. And notice the SMCI is still there, and it's still the #1 stock now. How powerful is that to bring that stock to your attention back in January and still be the top stock as of today? What we're going to look at is, I'm not going to get into the value and all of those things. Again, I just want you to see the power of the ranking of VST. I'm going to quick test the top 10 stocks from January 9th up until current. Let's go bring this all the way up to today, which is June 1st. Let's run the test. There it is, up 21%. The top 10 stocks by VST in the database from January 9th, when we got the confirmed up call, until now, 21% annualized out to 54%. Anybody not happy with that? Now with that, 5 stocks won, 5 stocks lost, but look at that. SMCI brought to your attention back on January 9th as the #1 stock by VST, up 163%. Now granted, we do have some stocks that went down, but overall we outperformed the market by 3 times just simply looking at our top VST stocks. All right, that's one way. Let me back that up again. Let's go do the quick test of the top 10. We got a confirmed down call, and it was on 2/21 of 2023. Let's use market timing to get in and market timing to get out. I'm going to change the end date back to February 21st. See that red bar, that red box, down call? Now, using market timing, let's see what it looks like. Wow, we still outperform the market. Now we've got 7 winners, 3 losers. Now you see the difference between utilizing market timing to make money and just buying and holding. Yes, we made more money, but now we put ourselves in a better situation because now we have more winning trades as compared to losing trades. Market timing makes a difference, folks, and utilizing it will help you to capitalize on your wins. Now, yeah, you made a lot more money just buying and holding, but you had a lot more stocks that were going against you. All right, so that's one way. How about trying to find stocks, another indicator only germane to the VectorVest system? How about stocks that go up more than they go down? Stocks that are resilient to lengthy or long pullbacks or downturns. Let's sort by that indicator CI. Again, I'm not going to explain it here, but if you want to get a free stock analysis report, go to www.vectorvest.com/FSA to get that analysis report and get insight on all of these indicators. Now, notice that SMCI is not at the top of the list right now. All right, but the stocks that go up more than they go down are at the top of the list. Let's use the same dates. Let's quick test the top 10. Wow, look at that. Made another whole 3% or more just looking at stocks that were resilient to long or lengthy price declines. Look at this, 8 winners, 2 losers, up 11%. The market's only up 2.9%, annualized out to 94%. Folks, that's January. That's a little more than a month and you're up 11%. Folks, does this work all the time? It works the majority of the time. Would you rather have a system that will put these kinds of stocks in your hands to help you to make money? If the answer is yes, 99 cents gets you a 30-day trial to the VectorVest software. Folks, with this all being said, it's all about being able to consistently make money. Not only that, you need to have a system that you trust in. And that's what VectorVest will provide for you. A system that you can trust in that will help you to consistently make money. It's all about going back to the basics to make money. We don't want to get on a tangent and go all this way and that way, and have a system that gives you the ability to make money and do it consistently. And that's what we provide. We do it smarter. We do it faster. And folks, this is what it's all about, making money in the market. With that, if you like this video, hit the like button. If you're new to the channel and you like this information, don't forget to hit the subscribe button. And folks, we will continue to bring this kind of information to your attention over and over again so that you understand why VectorVest is the best choice out there. This video is over. And until the next time, see ya. Hey VV Nation, you know that we can analyze any stock in a matter of seconds. Do you want to analyze any of your stocks for free? You want VectorVest to tell you what you really need to know about that stock? Well, you can. If you go to www.vectorvest.com/YTFSA, you can get a free stock analysis on any stock that you're currently holding or are possibly looking at. Folks, what do you have to lose? Do that now and analyze any of your stocks in a matter of seconds.